Good morning, everyone. Welcome back to the Schwab YouTube coaching channel for our Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a really beautiful morning here in Denver, Colorado. As usual on a Wednesday, today I'm joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. How are you doing today?
I'm doing great, Kevin. Good to be with you. I missed you last week. I'm glad to be back with you this week.
Well, I'm glad to be back with you as well. We've got some interesting developments in a couple of areas that we're going to talk about today. The precious metals trade continues to be pretty hot, to say the least. So we're going to make sure that we look at those charts. But Brent, it's really hard to look at those and think that, my goodness, this is something that has to continue, doesn't it? I mean, the move in these things has just been parabolic of late. It's crazy.
It has, and it makes me think of when something's, the expression, the bigger they are, the harder they fall. Well, the quicker it goes up, sometimes it could mean the quicker it goes down too. So, but right now we're not seeing that. It's just going up.
Nope. It's the truth. So we're going to look at a bunch of charts as we always do here in Trader Talk, everybody. So thanks for being here. We're joined also by Barb Armstrong in the chat. Say hey to Barb. She'll answer and reply to comments, questions that Brent and I are unable to get to, but we're going to keep an eye on things there as well. We hope to bring your questions into the discussion throughout. You can feel free posting. We go about 45 minutes there in total. All right, let's also remind you to follow the three of us on X. Barb Armstrong, CS, Brent Moore, CS, and Kevin Horner, CS. X has its flaws, obviously, but it's the best way for you guys to engage with us when we're not hosting classes for you. So we will never reach out to you directly on X. If you reply, however, to any of our posts, you're likely to hear from us. So if you're looking for ways to carry on the conversation, X is a great place to do it. And of course, make certain you're subscribed to the YouTube channel as well, so you're apprised and aware of all that we've got going on for you day to day and week to week. So with that, let's jump to the disclosures and then we'll get into things. Please remember that our conversation here is only for your information and your education. We do not make any recommendations here. We do not endorse any specific approach to trading. We do, however, discuss technical analysis concepts and strategies as we review the broad markets. When we do that, just bear in mind, decision making on your trade should not be based exclusively off technical analysis. We think you can utilize a multitude of key factors, but to rely on any one thing as your decision point in deciding whether to buy or sell can be a little bit tricky, so please be aware of that. Additionally, if this is one of your first times joining us, we follow essentially a top-down review of the market. What that means is we start broadly with our biggest indices, we work our way through some industry groups, sectors that are providing leadership and maybe switching in terms of trend so we can understand where maybe we have the best opportunity to participate in what could be developing new trends. And then as always, we try to hit up stocks in the news. We've heard from a few companies recently with earnings, so we'll be sure to check in on a few of those. Now, with that, let's jump into the S&P 500 as we always do. We'll lead with that. Brent, it looks like we have made the level at 7,000 today. It's official. We can put the new hats on, right?
New all-time high, and we were saying that yesterday as well. But we're off to a new start today where we're breaking out again. And how many? If you just look at this chart, those are mostly all-time highs there. Every peak there on that, and the party keeps going. Yeah.
Yeah, so as we've said, one of the things we've said at least is trying not to fight against it. With the trend, if you've been trading the S&P, it's fair to suggest that we've not gained. I mean, we are at 7,000, so we're not gonna deny the fact that we've got a bullish uptrend. But if you've been a little bit timid in your movement in here, you'd be forgiven. I mean, that move last week, Brent, where we closed below the 50-day, didn't feel all that great, and yet it was just one day. And I'm constantly reminded that we traders, we really need to have that definition of our what we determine to be confirmation for either breaking down or breaking out. In this case, a one-day close below the 50-day clearly wasn't sufficient to break the trend.
Yeah, and that's similar to what we saw about a month before that. I think that was in mid to early December where we had that break, quick dip down below. The trend's been persistent, and there hasn't been enough, negative news to change things. Now we're in earnings season right now. We're kind of right at the peak of it right now. In fact, I'd say, and that can certainly affect the market. There's geopolitical things out there that can affect the market, but right now the market has been pretty strong, to be honest, and the economy has been pretty strong. And despite a lot of, there's little things you can look at it that aren't great about the economy, but it's holding up to as compared to what a lot of people's concerns were about the economy, and I think the market is just kind of reflecting that.
I think I agree with you, Brent. If I was going to make one encouraging comment as it relates to how traders might be watching things here, if you're watching the market every day and you're listening to the conversations, the narratives, the headlines, there's a lot of what we would refer to as noise on a day-to-day basis.
Yes.
That's probably not having a great impact on the true trend of the SPX or even the NDX we're going to look at here momentarily. But Brent, is it fair to suggest that if we were, a longer term or maybe a less active manager or monitor of the market, just following something as simple as the 20-week moving average in green here might be a real comfortable way to monitor the SPX trend? It's been above that green line since May of last year, so a pretty strong trend in this way.
Yes, and just keep in mind, so when you're talking about a 20-week moving average, a lot of you may have a daily chart up there. That would be the equivalent of a 100-day moving average, because there's 5 trading days in a week. So it doesn't matter which one you use, but the point is the longer term moving average is often used by longer term investors as a signal, bullish, bearish. And if you just look at this chart, here's going back 5 years, and you just said, hey, I'm in the market. And I'm not saying this is going to, be how it is going to be in the future, but if over the last 5 years, you just said, I'm in the market as long as the stock is above that green line there, that would not be bad. That would not be a bad return there you'd be having on that. Things would have turned out very well. And out of the market when we cross below the green line. And, there's variations of that. Some people will use moving average crossovers, but just using long-term moving averages for longer-term investors, not necessarily a terrible idea.
Yeah, I think it's easy to be bogged down by that daily chart. And while we host shows here for you every single day, it doesn't necessarily mean that the broader trends are shifting. So very important. Make sure you're evaluating things on a multitude of time frames. It's important that we consider this over daily, weekly, and sometimes even shorter term stuff as we're working through things. So good process to always pull back the curtain a little bit, right, Brent?
Yeah, one other thing I would just add to that, Kevin, that is, your portfolio is not monolithic. Okay, you may have longer term investments in a portfolio. A lot of what we focus on here is trading. This is Trader Talks. We talk about trading here. And so when we are talking about certain levels, it may not be for the entirety of your portfolio either. So just keep that in mind. There's different types of investing, and your portfolio isn't likely going to be all trading, perhaps. So there's a good chance you'll have longer term areas of your portfolio too.
Yeah, that's a good reminder too. I mean, we are interested in talking trade, but the reason that so many traders are comfortable trading is likely due to the fact that they are allocating a majority of assets to a diversified long-term portfolio that exposes money to all sectors and asset classes, and that way you're not overdoing it or too aggressive. That gives you a benchmark to base decisions, and that kind of process is one that is widely viewed in the market and in the broad industry as being the way that a majority of investors, especially over that long window of time, think 10 years, 15 years, 20 years and more, That's how a lot of investors choose to manage things. But that comfort in trading comes from the if you will, the security of an allocated portfolio over a long haul. So, if that's something you're not familiar with, or maybe you're looking into, that's a really good conversation to have with somebody in your local branch, for example. Or if you needed to call in and have that conversation, maybe you're not near a local branch, we can do that for you as well on the phone. So, okay, Brent, we had a significant development late yesterday here in the NASDAQ 100. We had been talking about this 3-month ascending triangle running into this ledge of resistance, and we finally took it out yesterday. And not only did we take it out, today we have gapped further, and we are challenging all-time highs.
Yeah, that's a big break. And, we've been saying, well, look, the S&P 500 is at all-time highs. The NASDAQ's not, well, hey, look, we're right on the doorstep of that all-time high. But more importantly, I think we're above what was a resistance level, which now I think a lot of traders would deem to be a support level. That's that orangish line there, where we went up and people kind of looked at this and said, well, market's getting a little frothy, or a little expensive there at that point. Sell off, goes up to that level, gets a little expensive, sells off. Well, we've broken above that, and now that becomes a potential support level. There's a nice bullish breakout there. Some traders will use that as an opportunity to, to take maybe a more bullish tact on particularly technology or communications or NASDAQ type stocks.
Yeah, good point. Obviously, the allocation of the NASDAQ 100 differs quite a bit. If we were to utilize, for example, the visualized heat map here, taking a peek at the NASDAQ 100, you can see where we are getting leadership today is certainly in some semiconductor space within technology. But just a quick look at the makeup, the component makeup of the NASDAQ 100 highlights the very limited exposure in your lower right corner to some of those slower defensive groupings. The utilities, industrials, staples, healthcare tend to be a little bit slower in nature. And so because you have a lesser of an allocation, the NASDAQ really goes as tech goes. So a break here is a positive in the NASDAQ 100. Take a look at this one on the weekly chart, Brent. Boy, does that look about that assumes a new high close on a week. Many traders would tell you that there's upside to be had with a new high close. Reminder, new highs are not bearish in nature, and my label is completely wrong here. What else you seeing on the weekly here, Brent?
What I'd say is this: the technical analysis that you use on your daily chart, you can use on your weekly chart. You can be looking at a 3-month daily, 5-year weekly, the trend, principles of trend, higher highs, higher lows, same. Moving averages, support levels, resistance levels. You look for the same stuff. And by the way, that would go on the other end of things too. If you're looking on, say, an intraday chart, you can still use those same indicators. But what I'm seeing is a strong trend and a bounce off that 20-week moving average there just last week, and used it as a support about, 10 weeks ago as well, and before that. And so, boy, it's just looking strong right now, even though for the most part over the past month, to be honest, the NASDAQ has not been as strong as, we'll say, if you break down industry groups, or excuse me, sectors, and you look at the strongest sectors over the past month, what you're going to see is energy, you're going to see materials, you're going to see staples. That's the last. Let's see. Is that a column? I think that may be
a 20-day
right there. Yep, 20 day. So that's essentially a month, a calendar month there. Do you see those energy, materials, staples, industrials? Those have been the better performers, and those often aren't the ones that drive the market. Often it's technology that drives the market. It's a bigger sector. Communication often is a bigger driver of the market. That's a bigger sector. Financials is the same. So we're seeing some extra outperformance by some of these smaller sectors over the past month. But what
Yep.
those charts are kind of showing is, well, maybe the NASDAQ, the technology is saying you're not, don't be done with me yet. I'm ready to, jump back in and contribute some here. That's kind of what the charts are showing in association with this right here.
Yeah. Yeah. Can't disagree with that. One final note here, everybody. Yeah, you're right, Brent, about the 20-day window here, basically close to year to date, right? But
Yeah.
take a look at it on a 6-month basis and sort it here. And look where the leadership is. Tech is still in the top half, but you can definitely see that it has not been our leader for quite a while, Brent. And if we've been, denying that, well, we've probably been having returns that may be tempered. If you've been trading exclusively in tech, your returns probably have not met what the broader market has brought us. Is that fair?
Yeah, I think that's fair. It's also, I think, probably a good I don't know. This is just total opinion. It's probably a good thing. You don't want tech to always be the thing that's lifting the market and other things lagging. What we want is a market, an economy uh, that has representation and has strength across the economy and a strength across the market. Even if there's smaller sectors, utilities, small sector, we don't want that to be terrible. And, but and for quite a while, tech was just like responsible for the vast majority of the gains that we've had. So it's probably not bad to have some representation here over the past 6 months from some of these other sectors, healthcare and energy, materials and whatnot. And that's what we've seen. So, but you're right. Every dog has its day, so to speak. And right now it hasn't been tech as much over the past few months.
All right, last thing, Brent, that I wanted to look at is if I was to treat this, and this is not the case, so I'm gonna temper this a little bit. But if we were to treat this as an equity chart exclusively, Brent, and we know this is an index, but if we're trying to get an idea for where this NASDAQ could go based on a potential breakout, one way might just be to utilize a Fibonacci move, maybe from the peak to the lowest low we made here. So I'm just going to draw that in and illustrate it. And again, I'll remind you, everyone, when we do things like this is just the ways that traders think about potential opportunities and where they might run to. And this is kind of a way to give some consideration to a potential breakout, Brent. So if you could get a new high close, reminder, we're looking at basically all of November, all of December, and all of January, so a 3-month window. So if a trader were to see a breakout here, they might look and expect a potential move up to the 161.8% extension if it gets there. And if it were to get there, they might look at it in about a 3 to 4 month window, something akin to the time frame of our short-term consolidation in here.
Yeah, that's a good point. Sometimes we have a target and people think, well, it's going to, just kind of do this big flagpole up to that target. No, it may have go up and pull back and up and pull back. And so that's why the time frame is important to consider in here. And, there's no guarantees it's going up there, but that's kind of using a Fibonacci. Fibonacci levels, like Kevin just drew, can give you potential support levels and potential resistance levels or target levels in there. Just another approach to that.
Yep. And, you need a lot of clubs in your bag when you're trying to decide where are you going to maybe target a price move, and you've got a lot of things that you can work with. This is just one. And again, as Brent said, we know that these approximations of targets are never guarantees to be achieved, but that's just one thought process that some traders might look at. Brent, let's move into the Russell 2000. We had a brief pullback here. I thought we might see the pullback into the 20-day moving average here, but it looks like today is offering us a potential hold. And if I'm not mistaken, I'm going to pull back on these arrows. I think today's move may have pushed us right back above the 10-day, and sure enough, right back above it.
Yeah, we're right there. That's kind of a bull flag pattern. Now, we don't know that, it's going to continue up, but that's a bullish pattern. When you have the upward trend and it pulls back and then gives you the bounce, like we saw the bounce, that's a lot of traders will deem that as bullish. And, if you find it helpful, if you need a lot of people can just look at the price action, and you can tell this from the price action. But if you want an idea of momentum, you can use an indicator like the RSI, which you have at the bottom of the chart, which kind of goes, hey, that momentum is shifting back to the upside here on this. So we'll see where we finish the day on this, but nice little gap up today on the Russell 2000 and potential bounce and flag pattern.
Brent, I'm sure there were many a trader worried about this, what it looks like a gravestone doji, right, from just last week. And it did result in a pullback.
It did.
But it's a really healthy reminder that not all patterns mean reversals, right?
Well, yes. And also, it's these candle patterns are typically short-term indications. They're not indications of a complete trend change necessarily. It may be an indication of a momentum shift. It may be an indication of a pullback, an overbought condition, or a reversal. But a reversal after a strong move doesn't mean the entire trend is changing. For that, we're looking for broken support levels. We're looking for lower highs, lower lows, stuff like that. A single candle typically isn't the thing that, a change in trend may start with that, but it needs a lot more than that to signal that. So I don't get if you're looking for anything other than just a short-term reversal, don't read too much into these candles.
Okay, I think that's fair to point out. Thanks, Brent. Now, what about one other key detail we need to discuss? Today is actually an FOMC meeting day. It has there's not been much discussion about it, if at all, because the expectation is for no changes to policy, basically just to hold rates steady. And yet, Brent, we have seen under development here a move in yields to the upside. So this feels as though we're certainly getting selling of U.S. Treasuries leading to higher yields.
We are, and for a while, you kind of have an orangish line on that chart there. And for a while, we've been pointing that out as kind of a key level. And I think it was a key level. We broke above it. We retraced back to it, and it's acted as a support, if you will. And, I know some of you may be thinking, well, it's weird to talk about support or resistance levels on an interest rate. But keep in mind, this is just going to be the inverse of the price of the U.S. 10-year Treasury there. So, but yeah, we're above that. And we've seen this reflected. We don't need to look at it right now, but mortgage rates applications are going down. We've seen a drop in mortgage applications the last few weeks because, I would think at least because of interest rates going up. And so, yeah, a lot of, interest rates ticking up. And I don't know how much of that is it lack of confidence in the U.S. Treasuries and the dollar, in whatever reason, interest rates have gone up. So it'll be interesting to see not what the interest rate decision is today, because not many people are expecting the Fed to make a cut today on the short-term rate, of course, is what we're talking about. But it'll be interesting to see what their comments are about the rest of the year. I think the markets are pricing in a couple cuts through the end of 2026, but just the overall narrative of what the economy is, and that's what we'll be looking for today.
Yeah, at least as it relates domestically, this is something we can keep an eye on. I know many of you are asking about maybe what's happening with Japan, with China potentially. We do need to be at least aware of it. There has been, and you all know that we have some limitations here because we stick to indices, so I can't very well pull up a whole lot as it relates to these countries individually, but we could look briefly at the yen, and you can see that the yen has popped, and that's certainly got people a little bit on their toes, so to speak, Brent.
Yes, and just to clarify, this is a future. We're not talking about trading this. We're just talking about what the yen has been doing. The yen has popped, yeah, absolutely. And of course, if we look at the U.S. dollar, we're going to see the dollar has gone just opposite there on that. here's the dollar. Look at the crash in the dollar. I mean, the significant drop in that dollar there, and that that affects the market. And people ask the president about it, and I think the president has said that in the past, at least, I haven't heard his most recent comments on it, but has probably been kind of more in favor of the weaker dollar in the sense that it can certainly help U.S. companies that are exporting to other companies. It makes dollars cheaper. It makes other countries able to buy U.S. products for cheaper.
Yes.
And so it's not, I mean, we look at the dollar, and I don't, somehow in the middle of my brain, I think I have this, dollar's cheaper, that's dollar's going down, that's bad sign for the US. It's a mixed bag. There's pros and cons. And but the fact is, we've seen a significant drop in that dollar recently, not just, very recently, and then also the general trend from mid 2022 has been going down too.
Yeah, and you're right. The relationship of the dollar relative to the multinational U.S. corporations is significant. So there's a little bit of lift here, if you will, with the lower dollar and some of those multinationals that are holding trend. But the thing we may need to pay attention to is the potential for Japanese intervention within their markets, and that could kind of roil the international market. So we do need to be aware of it. We need to keep our ears to the rail at least a little bit in that regard. Okay, Brent, let's move back into U.S. stuff here. Let's hit up the semis, having a big day following some earnings reports, which we're going to touch on later. But the continuation of the trend here is really hard to argue with.
Absolutely, but kind of a flag pattern there on this. Nice big flagpole and a hold and a bounce, and it looks like it's in the middle of a new flagpole here at this point. So semiconductors have been, doing what semiconductors have done, and that's that's can help. When we talked about the Nasdaq, we were saying, the Nasdaq was having a nice little break. Probably not coincidentally, the semiconductors are pretty well right now because they're a big part of the Nasdaq.
That's exactly the truth. Now it's semis continue pushing. I mean, you can't get step in. I mean, you can step in front of it and you can deny what you're seeing. It's just at our own peril as traders. So it's nice to see. But what's really interesting to me, Brent, is how semis have continued to make new highs, and it wasn't until just yesterday that we got the Nasdaq to move through to those short-term highs and potentially new all-time highs today. But it's because it's lagging elsewhere, right? Software, for example, has been terrible in terms of the trend, at least. And I'm going to point this out. The downtrend here has been notable. It has rallied into an area of potential resistance here. It more than made a measured move target based on the double top up there. So this has been a real slog in tech, and I think it's helpful to be reminded, Brent, this is not even though the Nasdaq is doing wonderfully all of a sudden, it is not doing wonderfully in all aspects.
That is correct. And that's true. This is a perfect example. I think this is a great example right now. And it's true among other, sectors. Sometimes we think, this sector is doing well. Well, not every industry group or subsector is necessarily going to participate in a move by the overall sector. So for convenience, we often talk about sectors as a whole. But if you ever want to break down the sector, there's a good list here in your watch list. In fact, why don't we look at that real quick, Kevin? If you go over to the watch list there, and you get your new watch list, and you can go sectors and industries.
Okay.
And if you go to public, and a lot of times we go to, hold it right there for one sec. The first one right above that, it says S&P 500 sector indices. That's the one with the 11 sectors on it, everybody, and just broken down: energy, IT, communication, so on. But if you go to S&P 500 sectors and industries and look at that, it breaks it down. And then what you can do is you can see what, and you'll probably want to put a description in it, because
Yes.
you're not going to know what the symbol is. But once you do that, what you can do is you can then look and see what, expand that out. And then you can see, hey, look, there we go. Now we can see what industry groups or what subsectors are doing within the overall sector. And, so anyway, that's, I think, can be a helpful thing there on that.
Yeah, no doubt. I like to do this commonly over in the Market Watch page, because I like to add in all those other details that you all see me doing from time to time. We keep the sectors here listed, but you've got all those same details. So if I just changed here, this is identical, by the way, everybody, whether that's the watch list tool or the Market Watch page and the quotes section, you can get all that same stuff here under public. So sectors and industry groups, using all my same columns, sorted on a 6-month basis. Boy, what a shock to see the S&P Gold Group there at the top. That's been such a on a tear. They're 6 months up 100%. So you can see where leadership is, and this is certainly a helpful way. I love that this is all native to the platform, Brent, and all I need to do is customize my columns to my liking. So many opportunities. And of course, when you're thinking about the market broadly, and you're thinking about the market from that top-down approach, everybody, the way that some traders will utilize this is they'll say, all right, which of those indice groups is the one that I want to trade in? And within that indice, in that index, which sub-industry or industry do I want to be in? And so they'll scan within, for example, maybe small caps, and then say, all right, now I'm looking for gold investing companies that are either in gold, they mine for gold, or something in that way, Brent. They can scan the market for those in a multitude of layers, right? Index relationship, industry group relationship, and then maybe finding those that are trending up, higher highs, higher lows, etc. It's just an easy, common, very basic way to scan the market for trade opportunities that may work out.
Yes, and just a little shameless plug here, Kevin. I'm going to actually be doing something similar to that today in my managing options portfolio class at noon Eastern time. So make sure you check that out. One other thing I would point out on this page, you can sort this. So like if you sort by the symbol there, and I know it's kind of weird because you don't know what these symbols are, but what it will do is it will sort them by all the ones in the particular industry group. So energy are all the ones that have the number 10 after the S&P 500. If you want to, let's say you want to go down to IT, scroll down to where it says number 45 down there. It's going to be down the list. It's a long list there. But if you go to all the 45s, there'll be all the IT ones. And there you can see software services and IT, and you can see the variation in performance between, like, for example, on IT, we had, semiconductors, which were doing great, and we had software, which is doing lousy. And you can kind of see those all grouped together there. So just take advantage on this. You can sort by whatever you want, whatever column.
It's not that I didn't know it. I knew it somewhere in the deep recesses and coils of my brain, and yet I just didn't put that together enough to recognize it, Brent. That is a wonderful heads up that, you're going to get your industry, sub-industry groups just by, the first one there, tech sector, and then the sub-industries within it. I didn't even think about that. That is wonderful. That was very helpful even for me. So thank you so much, Brent. That was great. I did want to today, before we get to stocks in the news, I thought it would be a good idea to look at the move in energy today. Because not only is energy trading at new highs all of a sudden, but oil broke out, and I thought that might be a little notable. We've been talking about the recent move in oil into that $62 per barrel level, coincident with the 200-day moving average, and we took it out with yesterday's close, and now you're getting continuation today.
We are, and we'll see. Oil is very susceptible to geopolitical stuff, so I don't know. We'll see, but that's a significant breakout when we break above that. That 200-day moving average potential support level now. You can see the horizontal support line on that. We'll see if that holds. No, I think for a lot of us, we kind of hope perhaps the trend doesn't continue because higher oil prices can negatively affect certain aspects of the economy, including inflation. But it is what it is, and right now that's a pretty strong break. I mean, we had a downtrend for a while, but
Yeah.
now we have higher lows and higher highs. Not that's showing some strength in oil.
It is. We'll see if this move to the upside holds. Remember to define your own confirmation. Maybe 2 days above it is sufficient. Maybe you need a little bit more. But as Brent called out, we're looking at the future price of oil here specifically, and just remind you, in order to be utilizing futures or trading futures rather, you do need to be familiar with the risk disclosure statement for futures and options, and in order to do that you got to be prior approved. So make sure you go through your steps if you wish to do so, everybody. Okay, Brent, let's talk about some of these stocks in the news this morning for various reasons, but not the least of which would be some earnings detail. So I wanted to pull up, let's see here, we had, well, actually, I wanted to start. I think we should start with maybe Amazon. Amazon announced some layoffs here, actually. Let's take a look. So Amazon, here we are, up 1%. We've been watching this one for a multitude of reasons, of course, but this got finally got kind of outside of this little consolidation thing, but they announced plans to eliminate up to 16,000 jobs in an organizational restructure, essentially. Now, traditionally, Brent, this is a positive for the bottom line, of course, but the stock itself has kind of been trying to figure things out for a while. Back above the 20-day, maybe in a short-term level of resistance. Is there anything you've been monitoring as it relates to Amazon specifically?
Well, we do have earnings coming up, so that can certainly change things. But it isn't, once we broke out of our channel, the question is it going to stay above that? And often it'll use the breakout point as a new support level. Well, we kind of broke back down below it. So that happens. It just shows that it doesn't always stay above it. But at this point, we're back above it. Generally, higher low, you can see that with the white line you drew, the diagonal line there. Generally, higher lows, even though our highs are been kind of mixed on that. And we'll see if we break through the other one. But all in all, anytime you're above that 20-day moving average, that's the orange line right there, and the 50-day moving average, and they're sloping up, that's probably a pretty good signal there. And just because they're doing layoffs, that doesn't mean that's not necessarily a bad thing for the company itself. I know there's workers that it's not great for, but the company seems to be reacting positively. The stock seems to be reacting positively today.
Yes, it does. Now, we are going to be hearing from some names here this afternoon. Let me think here. Today, if I'm not mistaken, that's like Meta and Tesla this afternoon. Let's just check the calendar here, everybody. Yeah. We've got the NASDAQ 100 in there. So, yep, there's Meta. Meta, Microsoft, Tesla, Lam Research. So, obviously, this afternoon is going to be a fairly important day. There was Starbucks this morning, though, and I noted that the Starbucks move was kind of notable to me based on the chart. So I thought we could pull up the Starbucks here. If I can get that to load a little more quickly, that would be great. But I think that's tied to my Wi-Fi, so we'll see momentarily if it'll stop spinning.
But I guess one thing while we're okay, is that loading there?
Yeah.
Okay, there we go.
Look at that. Actually, very significant move here.
Yeah, that's a big move, big gap up. And, it's up about 5% right now. And you can look at the candle and go, well, we're off the highs, but still, hey, look, we're up 5%. It's not, I wouldn't fret on that too much. We'll see. Hopefully, if you're a Starbucks bull, we hold the lows of the day, which are still a significantly increase because of the gap up on that. But it's a big company. It's a strong earnings. And so, I don't know what else to say on that right now. It is, you can see the strength of the move reflected in that RSI too at the bottom of the page. We're up in that
Yes.
70-ish level there.
Yeah, the significant development was obviously getting through about this 98 level, I think, from a technical standpoint. And now it certainly has an area where traders could start to set their risk on either you're a new investor looking at Starbucks and thinking, hey, they're undergoing restructuring and they're trying to reduce costs a little bit. They're trying to become a little bit more streamlined. They got a little bit fat and happy, if you will, right? Everything was all right. We can have any price we want. Everybody's going to Starbucks, and it just has changed a little bit. So maybe keeping an eye on it with this significant move here would be helpful for some shorter term bulls perhaps, but we'll see if that level maintains. Brent, we did hear some of those semiconductors, so let's talk about maybe Texas Instruments here. Let me pull this one up. Texas Instruments was upgraded by Bank of America to neutral from underperform. It has a target now at 235, which is up from 185. So that's a pretty nice development, Brent. I've got the 2-year chart in here, but again, you can see the gap move is the significant one, up 7% here today.
Yeah, big move, and we're near the high of the day too, or closer to the high of the day. So that bodes a little bit more, well, short term on this as well. But either way, strong move on Texas Instruments. Look, these are, so far earnings season has been a relatively strong earnings season, and that can help the market as a whole. When we look at like the S&P 500 or something like that, there's a lot of things that can affect it, but the accumulation of earnings can certainly boost the market as a whole. And then of course there's some big individual companies, and we may get, a couple like Microsoft, which we have today, can certainly have an outsized impact on that and affect other stocks. Texas Instruments probably isn't going to affect that many other stocks, but it's just when we look at this and we look at company after company, are they beating earnings or missing earnings? You get the sheer number of those, and it's that's part of what is boosting the NASDAQ and the S&P 500 to new or near or close to all-time highs on those.
Now, Brent, there's 2 more that I thought we could hit real quickly here that were upgrades today. One of them is Applied Materials, one that everybody's quite familiar with, I'm sure. Running here against the 20-day moving average, made a new high here today. They were upgraded at Mizuho to outperform, had been at neutral. Target is 370. That's up from 275. Just remember, targets are never guarantees to be achieved, whether that's an analyst or a measured move target, as we've spoken earlier today. You can't really, there's not much to say about a stock making new highs, Brent, but another one that did get upgraded was Visa, and that was upgraded to buy from neutral with a target at 385, up from 327. That was at Rothschild and Company Redburn, and I thought that was interesting because of the price action we've seen here, Brent. Got thrown back to an area of potential support, and if nothing else, it looks like maybe the selling has lost steam over the last 2 weeks.
No doubt, and you can see that you're seeing the volumes lower on it. You can see that towards the bottom of the chart there, and it's like a consolidation. People are like, well, look, it was overpriced perhaps in people's minds, but now we're hitting this level. Now that would be a significant break if we start to break down to new lows, hopefully with an upgrade, and hopefully hopefully within. This was an upgrade, I think, is that what you said? Is that correct?
Yeah.
Visa, yeah. That helps to keep it where it's at, and not that before you reverse, you need to kind of stable. You got to stop before you reverse direction, and that's hopefully what's happening with Visa here.
Yep, that's exactly my thought. I love my analogy about being on the highway. If you need to flip around, you generally don't just jam it into reverse and drive. You have to come to a complete stop and then put it into reverse, so we don't hurt the vehicle.
Yeah, and so that's not super bullish necessarily yet, but it's at least the bear. So I think a lot of bullish traders would, wait perhaps, and before they considered this to be very bullish, but at least this is the starting point for that, and then you can wait for breaks to over at least the last couple of weeks of price action as a potential bullish signal for some traders there. Or if we do break down below that white line, then the bears will often step back in.
Good stuff. Brent, the last thing I'm going to do is just remind everyone, if you're looking at those stocks that we noted earlier, set to trade, rather to have earnings today, like Lam Research or Microsoft, Tesla, Meta, etc. If you're looking for an estimation of maybe what price action might look like after hours, then lean into what you're getting from the market maker move here. That's what that number is signifying, is a potential $18 move one way or the other. We never know which direction. We also don't know if it's going to make that level of a move, but I wanted just to remind you all that if you're trying to gauge the volatility for these upcoming earnings announcements and ways to give consideration to approximations of potential moves, this is a good way to do it. So give some thought to that as well. Sorry we didn't have time to dabble on that one for you all today, but I want to thank you for joining us. Big thanks to Brent as always, man. We had a great conversation today. Always great to be back with you. So I appreciate you stepping in for me when I'm not here as well. That's a big help, obviously.
I'm always happy to be here, Kevin, with you. I enjoy this, and I enjoy everybody. Thanks for joining us, everyone, today.
Yeah, have a great afternoon, everybody. Thanks to Barb for managing the chat. Did not see a survey opportunity today, so don't forget to follow us on X. If you liked our discussion, hit that thumbs up button for us down below. We'll get this one reviewed and into the archive ASAP. Hope you all have a fantastic Wednesday, everyone. We'll see you again real soon.